the ISM figure shows front loading. It's the one of the most, I guess you could say, the strongest ISM prints that we've had in most recent memory. But we're now at 32 straight months of employment declines. Purchasing managers, yes, there are incredible manufacturing gains, but it looks like front loading by purchasing managers who are perceiving inflation coming. And that goes back to Kashkari last week, essentially talking about inflation expectations becoming unanchored, meaning that they're anticipating inflation, moving into the future. And then those are all kind of macro events happening inside of our markets. What has been the result? Well, we haven't necessarily seen the rate cut being pulled into the future yet, but we do have some really fascinating kind of leading indicators underneath the surface that are changing. And you can see here that our regime tracker here has been screaming in the direction of a boom since the 20th. The markets have been grinding higher in the series of long setups. This is where that bear trap was. Remember that we had on Monday, Tuesday, 2 weeks ago? We've been screaming in a deflationary boom. We were anticipating that squeeze as the VIX was falling back into its 1915s. And then it went through it. And the indices kept on rallying. Well, this is the first time that we've backtracked since that time, really since May 19th. May 18th to 19th is the last time that we had any kind of backtracking inside of our regime tracker. As far as the dollar correlations go, the dollar is strengthening. And what do we see on the 15-day? Well, it's gone from 0.4s to 0.1s. And so we've gone back to neutral. There's a negative correlation that's coming back into the smaller time frames. So what is the dollar doing? It is strengthening. And we have all of these leading indicators that are telling us something has changed to go along kind of with the macro type of environment. Here's the dollar's pullback. We're in the first full retracement long from lows. Wall Street in theory gets its fill inside of that dollar long setup. Inside of that dollar support level, what happens if in the negative correlation, if the dollar rallies away from support? Think about this for a moment. We're at Friday's lows to highs. What is the ES in? It's a 50% short from highs to lows. That's inverse. That is inverse. Now, bank isn't open yet, but what is the VIX in? The VIX is in a long from Friday's lows to highs. So you have the VIX inside of a pullback, and you have the dollar inside of a pullback. I mean, there's a dip to buy in the VIX. There's a dip to buy in the dollar. And when those things go up, the indices go down. It's kind of a big deal. This is now the third pullback that we've had on the VIX since yesterday. 2 of them have completed profit targets. We'll see if the third continues to hold here. And then you have the indices inside of 50% shorts from highs to lows. Now, as we were going into our morning, we were acknowledging the fact that we have a gap fill statistic that would suggest that there is an edge leading us into the gap fill inside of the 20 handle. And you can see that we just peaked our head above that 20 handle here. Now, gap fill statistics, as we're going into Tuesdays, are historically right around 65% over the last. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.